Most of the big banks recently updated their online banking agreements, and we started hearing from people who say they were victims of online fraud but couldn't win against the banks because of their online agreements. People like this home contractor who lost $1,500 after a client e-transferred a payment and a fraudster stole the money. Jeff Harney's bank, RBC, pointed to its online agreement, which says the bank is entitled to pay anyone who correctly responds to the e-transfer question and answer.
And this is why they were refusing compensation, because they didn't have to. You know, they have it written down that they're not responsible for this kind of stuff. And that, for me, the upsetting thing is they don't make this clear enough. They know there's a problem here, and I don't understand why they don't fix it.
RBC told us it clearly provides information about protecting against e-transfer fraud in its agreements and on its website. So how do the banking agreements stack up when the interests of the banks are weighed against protections for customers?
They are so one-sided and benefit the banks to such a degree that there's no way that I would call these ultimately bargained agreements.
We asked this contract law prof at the University of Ottawa to assess the bank's online agreements.
These are take it or leave it, where the taker really has no option.
In general, Dempsey says the bank's agreements use vague language, limit liability for losses, and say they can change the terms at any time and decide how they'll let you know.
No person who has the ability to disagree would agree to such a term. I would not agree to somebody who says, here's my agreement with you. I get to change it, and I'll notify you the way I want to notify you.
A TD customer who wrote us said terms in her agreement seemed far too one-sided.
It felt to me like the banks were starting to tilt the balance in favor of themselves.
She filed a complaint with the banking regulator asking what can be done to ensure the provider is accountable. We asked the regulator whether it was investigating how fair online contracts are. It said it never reveals what it may be looking at. Anthony Dempsey says the federal government needs to create oversight to make banking agreements more fair.
We need a third party involved here, because leaving it to the banks to determine their terms, well, we see what we get.
Go Public asked the Ministry of Finance whether it would introduce oversight for banking agreements to even the playing field for consumers. It steered us to a voluntary code of conduct for debit cards that a number of financial institutions have agreed to apply to online transactions. The banks told us they are responsible for financial losses in certain situations and that they invest significant revenue to protect against fraud, but they emphasize that protections are a shared responsibility with customers.